Imagine you wake up tomorrow to one headline: World debt erased, $0 owed. At first, it sounds like a miracle. No more national debt, no more interest, no more red ink. But within days, your bank starts freezing credit, your pension fund quietly panics, stock markets around the world begin to suffocate. Because here's the brutal secret: our world doesn't just live with debt. It runs on more than $315 trillion of it. And if that debt vanished overnight, the global economy would go with it. So here's the question nobody asks. If every country is drowning in debt, who is rich enough to be the creditor? Welcome to Finance Wealth Money. The scale of the paradox. Every flag you see on a map is soaked in red ink. The United States, over $38 trillion of IOUs. The European Union, around $14 trillion. Japan, nearly $9 trillion. Even export powerhouses like China and Germany, even oil giants like Saudi Arabia, all owe sums so large they barely fit on a calculator screen. Zoom out. Global debt is now almost 3 times bigger than the entire world economy. If every country owes, then who's on the other side of that ledger? Some shadowy cabal, a secret empire of bankers, a single country pulling invisible strings. The truth is stranger, and far more unsettling. To see it, we have to rewind. The birth of the National IOU, London, 1694. England is bleeding gold fighting a brutal war against France. The king has soldiers, he has ships, he has enemies. What he doesn't have is money. Traditional options are exhausted, taxes are hated, the royal treasury is almost empty. So the crown turns not to soldiers, but to merchants. In candlelit rooms, a deal is struck. Lend us your money now, they're told, and in return you'll receive something new, a perpetual stream of interest guaranteed by future taxes. To manage this pact, a new institution is born, the Bank of England. For the first time in history, a state discovers a superpower. It can spend money it does not yet possess. In exchange, investors receive tradable promises, government bonds, pieces of paper that say, "We owe you, we'll pay you back later. Until then, enjoy the interest." This is the birth certificate of modern national debt. Other empires are watching. France copies it. The Dutch refine it. A young United States uses it to fund its war of independence, and then its westward expansion. From this point on, conquest isn't just about armies and territory. It's about balance sheets. Debt becomes the world's favorite product. Fast forward to today. Debt is no longer just a burden. It is the planet's most profitable product. Governments issue it. Banks trade it. Funds hoard it. Central banks use it as the backbone of entire currencies. The U.S. owes $38 trillion. Japan owes $9. Global debt grows by about $1 trillion every 100 days. Everyone owes. Everyone lends. And almost every citizen on Earth is stuck on both sides of the equation. Your taxes help service government debt. Your retirement fund uses that same government debt as its safest investment. You are both debtor and creditor at the same time. But to see how bizarre this really is, let's open one case file: the United States. The U.S. Hall of Mirrors. Take that $38 trillion of U.S. government debt. Who holds it? Roughly half of it is internal. U.S. banks, pension funds, mutual funds, insurance companies, the Federal Reserve itself. The other half? Foreign holders, about $9 trillion. Japan owns around $1 trillion. China about $800 billion. Then the UK, Luxembourg, Belgium, and others. So yes, America owes money to China. But China's slice is only about 2% of the total. The majority of America's debt is owed to America. Here's the loop. The U.S. Treasury creates promises, bonds, Banks, funds, and foreign governments buy them. The Federal Reserve then buys those bonds too, creating new dollars in the process. Citizens pay taxes. Those taxes help pay interest on those bonds. That interest flows back into banks, back into pension funds, back into the portfolios that hold up the system. Debt becomes a self-financing myth. On paper, the country is drowning in obligations. In practice, those obligations are the scaffolding holding everything upright. The global poker table. Now zoom back out to the entire planet. Japan buys U.S. bonds. The U.S. funds Europe through institutions like the IMF. Europe lends to developing countries through organizations like the World Bank. Developing countries in turn save their scarce dollars and euros by parking them in Western debt. Everyone holds everyone else's promises. It's like a poker table where every player borrows chips from the next. No one is playing with real cash, only IOUs. The game works as long as no one stands up and asks to cash out. Behind this circular chain of promises sit the true gatekeepers: global banks, hedge funds, sovereign wealth funds, and, above them all, central banks. These institutions don't just observe politics. They decide who gets to survive politically. When they withdraw trust, currencies implode, governments fall, nations go begging. Democracy may choose leaders, but financial markets choose which countries get to live comfortably and which are forced to kneel. When the illusion breaks, this invisible power only becomes visible when something snaps. Greece, 2010. Suddenly the bond market decides Greek promises are no longer believable. Interest rates skyrocket. The country can't roll over its debt. Hospitals face budget cuts. Pensions shrink. Unemployment explodes. People protest in the streets. Argentina has walked this path again and again. Currency collapse, default, austerity, repeat. Sri Lanka watched its fuel stations run dry when it couldn't secure enough foreign currency to keep buying energy. For years, the system feels abstract, just numbers, charts, ratings. But when belief dies, it becomes painfully physical. Empty shelves, soaring prices, shattered savings. That's when the real creditors appear: the IMF, rating agencies, anonymous bondholders who demand higher interest or harsher conditions in exchange for one more chance to stay in the game. The twist: debt that never dies. Here's the part almost no one is honest about. Modern governments do not plan to pay back their debt. Not today, not tomorrow, not ever. They roll it over. Old bonds mature, new bonds are issued, the tab is refinanced, again and again. Debt isn't treated like a loan you eventually clear. It's treated like a subscription. Investors don't want their money back. They want the payments to keep flowing. Because for them, government debt isn't a scary liability. It's premium collateral. It's the foundation of the entire financial system. If a country like the United States magically paid off every single dollar it owes, banks would lose their safest asset. The supply of dollars would contract violently. Global trade would lurch to a halt. The heartbeat of capitalism would flatline. So leaders don't try to kill debt. They manage it, cultivate it, curate it. And as they do, one final truth emerges. Yes, we owe it to ourselves, but we don't all benefit equally. The interest flows upward, from workers and taxpayers to the institutions and individuals who own the IOUs. Debt isn't just an economic tool, it's a class engine. So, who is the creditor? Really? So if every country is in debt, who is the creditor? It isn't a single villain. It isn't one country. It's a web. Wall Street and Beijing, central banks and pension funds, insurance companies and hedge funds. and millions of ordinary households saving for the future inside a system they never designed. Debt is money. Money is debt. You are inside the loop, whether you like it or not. The illusion only works as long as people believe the promises will be honored. When that belief fades, those promises become pain. Because beneath every abstraction, every bond, every spreadsheet, debt is still what it has always been. A promise that eventually someone cannot keep. If this changed how you see money, make sure to like, subscribe, and comment to see more videos like this.